we're a very open economy here in Malaysia. We depend very much on external demand. I think about 120% of our GDP is total trade. Something like 90% of GDP is domestic demand. And the former shouldn't be too badly affected by the shutdown. We have increased our reliance really upon, or the amount of trade that we have is largely manufacturing, a lot of it in electronics, particularly semiconductors and electronic services, and it's to ASEAN and China. So we're no longer so dependent upon the United States and Europe as we were. But as far as domestic demand is concerned, that's where the problem is. And the shutdown really applies to things like travel, entertainment, gaming, any form of leisure activity. That's where there's going to be a bit of a slowdown, I think, for the time being. It's very difficult to forecast when it will start to pick up. At the moment, there are various trades in the market, part of which is, recovery plays, things like airports, gaming, etc. They're probably going to be a bit subdued for the time being.
I wonder what's the state with the banks in Malaysia, very quickly, because I have 1 minute to go for a hard break.
Well, there's a lot more people wanting mortgages than banks are willing to lend at the moment, but there has been a sort of nearly 100% increase in household loan applications over the year. Of course, it's from a very low base and it's very hard to measure it. But I think the private sector activity here in things like housing remains healthy. The good thing about the banks, of course, is that they've been very tightly regulated. Non-performing loans are still at 1.5% overall, and banks are very well provided for. If you choose the right one, I think it's a good start to pick some up.
Okay.